Hi, and welcome to another edition of The Straight Scoop with John LaRosa. I'm John LaRosa, president of Market Data Enterprises, a 35-year-old market research and consulting firm based in Tampa, Florida. And believe me, over the 35 years that I've been analyzing different industries and listening to stock analyst conference calls, I've seen and heard it all. Today, what I want to talk about briefly is something called EBITDA in the parlance of Wall Street stock analysts. EBITDA stands for earnings before interest, depreciation, taxes, and amortization. It's basically gross earnings before taxes. It's the profits that a company generates. And the stock analysts on Wall Street are very concerned with this quarter's results and the profitability, the earnings of a company this quarter. That's one of the things that you should take with a grain of salt when listening to these analysts and their reports and the conference call questions. Their focus is very short-term oriented, whereas a lot of businesses don't do well in the short term because of a specific event, maybe the weather or some government action that they took against the company or the industry that they're in, some external event that really doesn't affect the long-term health of the company. But these analysts, they have a bunch of buzzwords that they throw around, like CapEx, which stands for capital expenditures, or they'll ask a CEO on a conference call, can you give me a little more color on that? That means give me a little more detail. Or can you get a little more granular? That means drill down and give me a little more detail of what the business is all about. And you just have to learn the lingo. But you should take what they say with a big grain of salt, because these analysts have tunnel vision. They are trained primarily in financials. They're looking at spreadsheets, they're looking at balance sheets, income statements, but they're ignoring some of the most important things that will affect how a company does, like the competition, the market trends, whether the company is executing well, what are some of the customer attitudes that are shifting. And so in many industries and markets, these things are much more important than the finances. EBITDA, or earnings before interest, taxes, and amortization, that's what results after the company executes its plans and makes their sales and delivers the product or the service to the consumer. So it's not vice versa. The financials don't drive the marketing. The marketing and the sales drives the financials. So when you listen to these conference calls, take what they say with a grain of salt. And another thing, in these conference calls, which are held on a quarterly basis, and you can usually listen in on a listen-only mode, it's a wasted opportunity, really, because these analysts are not asking the right questions. They're not asking about, well, what about your competitors? Let's take the weight loss industry with a company like Weight Watchers. How are dieters' attitudes changing over the last couple of quarters? How did the weather affect your meeting business if we had a lot of winter storms this year? What about pricing? What about the results of your ad campaign? What about the strength of your ad spokesperson? What about whether your programs are meeting the needs of the consumers? These are the things they should be asking about, marketing type questions, sales questions. But all they do is focus on EBITDA. It's like a mantra, say the word, chant the word, EBITDA, EBITDA, EBITDA. Don't get caught up in that BS. Do your research, do your due diligence, evaluate a company by how well they execute and the quality of their management and the quality of their products. I hope to see you again in future series. I'm going to cover a lot of different topics. And if you'd like to learn more about market data, go to our website, marketdataenterprises.com. Take care, and I'll see you next time.